Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, December the 28th. The year is 2023. Let's talk trading. Looking at versus looking for. These videos are for educational purposes only. Your results may differ from mine. What am I talking about? Well, I remember a long time ago. I posted a chart, just a blank chart, and I asked people, tell me what you see. And they would talk about candles and support resistance, and, pretty much everybody got it wrong. I said, well, what you see is here. You see a bunch of green and red rectangles with lines sticking out the top and the bottom. And most people are like, huh? I said, see, the thing is, those other things all had interpretations. Support, resistance, candles, those are all interpretations. But, these are rectangles. These are lines. You can't break it down any further than that. And so, the reason I'm talking about this, and I think I've talked about it before, but it's the end of the year, so we could probably go over some of the basics so we can start the new year off, right. Is that when you've got your trading screen set up, what happens is you start making interpretations. And then what you do is you start looking for, as opposed to just looking at and letting the screen or letting the chart tell you what's going on. So, for example, I was on the phone with Walmart earlier, and I got into a trade right before the news. Well, what I did was I was looking at, I was looking for something. And what happened was, I had gone short right before the news, but had I really been looking at, that's a black candle. So that means chances are the news that's going to go up first. And what did it do? It went up first, and now it came all the way back down to where I got in, and of course I traded my way out of the mess. But it was one of those things where it's like, you know what? I should talk about that on the video. And so, once again, right here, you might see that, we're only 3 pips off the daily low. We're in the launch pad. So, might be looking for longs. Well, no. What's the chart telling you? The chart will tell you when it's time to go long. You don't have to look for it. You just have to look at it. Because when you look for it, you're going to start looking for as many reasons as possible to go long, when all what you should be doing is looking for one reason maybe to go short. So if you're looking for something, then look for the opposite. Okay, right now we're starting the new H4 candle, and we know these H4 candles have pretty big ranges. In fact, here, let's see, where do I have a chart with the, right here. Let's switch over to H4 and look at the ranges on these. All you have to do is ride a candle for, one of these candles for till it hits its average range or close to it. Hey, if you just got half the average, that's 20 pips. Wouldn't that be nice? So, once again, if you're looking for a long here, you're not looking at the chart. So what's this going to tell me? What would tell me to go long? Well, depending on which method, I would need to see price get above indicator 2. Close above indicator 2. And I would also like to see H4 and H30 green. See, right now, I would have been suffering, because price went down. So it's basically sit on the hands if I really want to go long. As opposed to saying, well, I could go short. Price is below indicator 2. It just hit that flip-flop box. Let's see, what's the range for the day so far? What do we have here? Range is 90 pips. Yeah, it's possible for a reversal. I say I've got a 3-ball. Let's see. Yeah, flip-flop box here. Bouncing off the low, but it's still, this H4 is still red. We're in the ATR zone, so I would want to look for a long there. Almost near the lower wick zone. You can see in and out of that upper wick zone. And I was kind of kicking myself yesterday, not shorting. I saw it hit 28. I was thinking that would have been a good short, but I didn't wake up early enough to get that short. And as you can see here, it ran all the way up to, what was that, 27. So if I would have gone short right there, I would have had to see a 27 pip drawdown. So we're in the launch pad. That's another thing I look for. So, but if I look at the chart, it's like, oh, there we go. I could have taken the flip-flop box. Why? Price over indicator 2. The M30 was green, H4 was green because we just started a new one. Now we got an outside bar, which also has a flip-flop. We stay above indicator 2. We've got that long happening. But we didn't stay. Now we came right back. So, I mean, if I was in this trade now, if it breaks the bottom here, that would be time to get out because that's an outside bar. That's a higher bar. That's a lower bar. I believe that's an inside bar right there. Using the state change. And, I think that's the biggest thing I came up with this year is the state change. Because see here, if you would have been riding this trade until you got a change of state, you could have made a nice profit there. So right there, we've got indicator 2. It keeps wiggling back and forth here. So what's price do? It moves in one direction, has some consolidation, then moves the other direction. So once again, looking at the outside bar high for entry, the flip-flop box for an entry, indicator 2. So I know it's a subtle thing, but if you're looking at, then it's like, okay, well, this says long, this says short, but if you're only looking to go long, you're going to miss everything that tells you to go short, which just might save you some suffering. So when if you start to see those mixed signals, that's when you can say, you know what, let me wait for clear signals. So it looks like we want to break the flip-flop. Maybe break the outside bar high-low. And if you're wondering why it's flashing on and off, the way I've got it set is if the ask or bid are outside the range, it turns that off. Otherwise, there's too much stuff on the screen. So here we go. Triggering the long. Because I had a trader ask me, they sent me a message on Facebook, and they were asking about something I had posted, whether or not they wait, and whether or not to take profit. And the thing is, it's kind of like weightlifting and trading. Learn to make a pip. It's like, learn to lift with the pound. Because the thing is, in weightlifting, it's not about how much you lift, but you want to lift with the proper form. Because if you don't, and you start to lift heavy, you can injure yourself. And the same things in trading. Learn to make a pip with the proper form, proper entries, and then you can go for more. So we know we're in the launch pad here, but we came down to the launch pad. So when we come down to the launch pad, I don't always look for it to run up to 60. So we've, things are going slow right now. And so we just stay in the trade because indicator 2 is telling us to stay in the trade. So, and we haven't, actually on this chart, we don't have the balls. Here we do. A lot of times, if I see that one ball, I exit. And Walmart was saying, and we were talking earlier, and he says, you got to pick one. Either you stick with the balls or you stick with indicator 2. He says, don't try to do both. And, there's a lot of wisdom in that. Stick with one of those methods to get you in and to get you out. So right here, if I was going to target anything, I'd be targeting 56, which is the halfway point. But you can see right here, you're going to have to break through that 3-ball level, which is about the 38% fib retrace there. But we can just wait and see. So now we got a 2-ball, and 2 balls like to run. A lot of times those 1 balls, at least when I trade, it'll get in, it'll reverse on me. But we were coming off that low, so we're in the rat zone. We know that. So once again, if you're looking for something, you can find it. If you're looking at something, you're just, basically saying what you see. So I see we don't have any state change. Well, we did there. And then we broke out of that high. So everything right here is saying stay long, stay long, stay long. And your thing is, you'd only be up a couple of pips. And so once again, we opened above indicator 2, just broke through that flip-flop. 2-ball. 2 balls like to run and become 3 balls a lot of the times. So we can just stick in the trade. We're hitting the 50, probably going to hit some resistance there. And you can switch over here to M5. You see that looks like a return bar. So we could target that open. Once again, return bar, that's an interpretation. Notice here we had a break of the flip-flop here on the M5. Good for 4 pips. Indicator 2 on M5 is just now turning. So the green means price is crossing over it. Red below it. And then, of course, aqua means it's above. Magenta means it's below. That's why I like using these multimeters. I'm curious. If you use a multimeter, would you let me know? Because I like multimeters, but I think I might be the only one. Because I haven't seen too many people use multimeters on their charts, maybe with the exception of the candle color multimeter. But to me, I don't really like flipping charts, going back and forth when I trade. So anyway, fellow traders, I hope that helps. So let me know, are you looking for or are you looking at? Because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.